Welcome everybody, Mike Smith here. Delighted you could join us today. Instead of the normal trading tip, we thought we'd look at what's happening in the markets generally. After Friday's somewhat unexpected action, really what we've been doing is trading in between this 2160 mark and around about 22 to the top end on the SP500. So a relatively tight range of about 40 points, really right through since the beginning of July, so a couple of months worth for sure. And obviously Friday we had a relatively severe sell-off which pushed us back down towards this critical 2120 mark. You'll see here there's 2120. If we do break through this with any vengeance, we could see ourselves test the low 2000s in the not too distant future. So are we likely to do that? Well, at this stage, it's not looking likely. I mean, really, what happened was the market was pricing in the unlikeliness of a Fed rate hike for really probably the remainder of the year, and certainly hawkish comments by Fed members on Friday, on the back of the lack of, or disappointment with the lack of ECB stimulus that was expected by the market, pushed us down to where we see now, really. In terms of, there's no pre-warning in terms of volume. If you look on the SP 500, we've got buying volume right across all time frames. But now, of course, we've got this wide bar, this Hawkeye wide bar here, with a red heat map on the two fastest time frames. We're likely to see now, obviously, selling volume on all three time frames when we see the bar from Friday, not surprisingly. Just a reminder, this wide bar is pretty crucial. We need to see a break below this before we go short this market. And so a last hour close below 2120 would really open the door to that. We never see a change in trend, the Hawkeye trend on the wide bar itself. You'll see we are officially in congestion. If we have another down day today, you'll see that trend change to red, certainly on the 1 and 2 day. We may see it back into congestion on the weekly on the back of last week's performance. In terms of how we play this, well, look, as I said, really too early to get aggressively short, and a bounce off 2120 is certainly not beyond the realms of possibility. You can see how important this 2120 mark is. Before we broke up from up above 2120, we had a test of it mid-June, a test of it mid-April. We were playing with it towards the back end of the year. So really, it's been quite a stubborn level on the upside to break through. And it remains to be seen, of course, whether that's the case on the downside. It's not a big economic day. The question is, of course, is how much follow through there'll be. Certainly, there's been weakness in both Asia and Europe. And US futures are down a fairly modest 0.4 or 0.5% at this time, which is about 3 hours to market open. So a very difficult market to trade at this stage. We were surprised to see the severity of the drop, and hence we wouldn't be surprised to see a session, despite their poor futures, that doesn't sell off significantly. If we do see another sell-off, then certainly shorting the market would make sense for you guys who are trading daily or longer time frames. For those of you trading intraday, that's probably where the opportunities lie at the moment. But just trade with caution, because it could be relatively choppy. We have got two Fed members talking today. Whether they say anything equally hawkish or not remains to be seen. But that could be the telltale sign as to whether we move down further from here or not.